Well, greetings and salutations, test takers. This is Dean Tinney coming to you from my off-grid studio, getting our kicks on Route 66 with our Q&A jam session, our Guru Nation Q&A jam session. You're welcome to join us anytime these are available. You can do so at deantinneytutoring.setmore.com. Hit the class tab and look for Q&A jam session. Let's see what people want to talk about today. Welcome, Charlotte. Welcome, Vince. You know how it works around the horn. Just put into the chat whatever you'd like to talk about, and we'll knock it out in order, one question per round, and then we go back and start over again. So let me get the chat fired up. Boom, boom, boom. No questions? Well, that'll be nice. I'll call it a Saturday, and we'll see you, Charlotte, Tuesday, and see you on the live stream, Vince.
One second.
Got anything?
I've got a question. I just took this practice final from Brian Lee.
Yeah, Test Geek. I think it's a very good correlation to the actual exam. What'd you score?
76. So I'm
score,
a little bit nervous.
You're gonna have correlation on that. Vince has taken the 7 as well, Charlotte. So
Great.
He did it kind of weird order. He took a 63, 65, and now he's circling back for the 7. But
I'm a little
Brian's
bit
exam is right
confused on the regular way settlement.
Well, he might be dated. Is it regular way? Does he have the 2T+1 or not?
It's T+2 on this, and then I watched a video exam to check my answers because I thought it was incorrect.
Yeah.
But one of your video exams recently, here's the question. An investor purchases stock regular way in their cash account. When would this transaction settle?
T+1.
Okay, so it is T+1.
Yep.
Because this says C, second business day.
No. Now remember, the customer, in terms of regular way settlement, is between broker dealers. So customers have under Reg T get 2 additional days to come with their money. So as a margin clerk, Vince, I can't come after you until T+1 + 2. And then I say, hey, Vince, where's your money? But regular way settlement is part of the Uniform Practice Code between broker dealers, and it's T+1. And looks like Charlotte's got a QID, so let's go grab the Kaplan Q Bank. Boom, boom, boom. Kaplan Q Bank. Where are you?
Yeah, it's a gain loss question. I understand the cap loss number, but the rest of it I'm confused about.
All right, let me go grab it. Let's see. Boom. If you don't have a Kaplan Q Bank, I highly recommend it. With my Guru 15 discount code at checkout, you can be yours for $55.80. Over 3,600 questions and a performance tracker. For that commercial, Kaplan allows me to give you a free look at Kaplan content like this. Now let me go find you guys again. There you guys are. Can you see my Kaplan Q Bank? Yes. Oh, maybe.
Yes.
All right. 155 8878. An investor purchases 100 shares of Ravid common stock at 40 on June 17th, 2019. So as a test taker, anytime I see a date, I just immediately think, okay, is this something about, have I been at risk for more than a year? Are they just giving me this date to cloud my mind? Are they doing the Jedi mind trick on me? But, I file away as potentially something germane to this question. With Rabbit selling, by the way, and I'm not joking here. I'm being a little bit facetious, I guess, but I sure like to talk to myself even at the actual exam. In other words, that conversation I would be having out loud with myself. I'd be saying, June 17, 2019. And they might come up to me and say, Mr. Tinney, other people are trying to take the test. I go, and, I don't care about them. Look at this. They're trying to get me on this little date here, So whether you do it actually, out loud, or talk to yourself out loud silently in your brain housing group, that might be something to consider. On May 11th, it's selling at 60 and she hedges. So she didn't offset the risk at the beginning. So she would have bought this put for 2 at the same time she bought the stock. her cost basis and her break even would be the same. But now she has interrupted her holding period. Please pay attention to my phraseology. I surely don't like when people say to qualify for long-term capital gain, you have to hold it for more than a year. My phraseology is different. If you listen to Dean, I say to qualify for a long-term capital gain, you have to be at risk for more than 12 months.
Mm-hmm.
Then you buy the put, you're no longer at risk. All right, so now it says the put expires. Well, that kind of sucks. We bought some insurance and we didn't file a claim. Right. So, I mean, I used to have clients get upset. Oh man, I bought the put and I didn't need it. I go, well, that's a good thing. It's a wonderful thing, right? You don't buy insurance because you plan on wrecking your car. I don't expect my insurance agent to say, I'm going to call my insurance agent and say, hey, I didn't file a claim this year. Another $10,000 down the tubes. Right. All right. So the put expires at 65. The investor liquidates the long stock position. So, hey, listen, if you on Guru Nation, we know that what we're going to do is set up a T
Mm-hmm.
and we're going to track the money, right? Money in versus money out. Last check I do before I do my money out, money in thing is I like to make sure there's not any odd thing going on. Like it's not 300 shares and 2 calls, for example, because if that's the case, then I can't do it per share because there would be odd, numbers floating around. So for the most part, though, I do things on a per share basis. All right. So we paid 40 for the stock. So we paid 2 for the protection. Boom. And it tells us we liquidate the stock at that price. And I got to go back and see what that price is. That's 60. And I bought it at 40. Selling the hedges, purchase the put expires. Oh, 65. I want to make sure I got the right, number in there, right? So 65. And then let's see. My put expires. And okay, so now let's see what we got going on here. So I say you made $2,500 on the stock and you got a short-term loss on the option of 2, right? So now let's see what if I would have missed this. Long-term capital gain. Well, you should have known you're not at risk. I don't think it's a big deal on the test, but remember you have to be at risk. And once you do this on May 11th, that interrupts the holding period. It interrupts it because you're no longer at risk. Right. So I don't expect you, Charlie, don't expect me as your broker to be an accountant.
Mm-hmm.
You do expect me to have a general understanding. So before we put the hedge in place, I say, Charlotte, I think the hedge is a wonderful idea. I mean, here we are. We bought the stock at 40. The stock is now at 60. And I think we should put in the hedge. The problem, though, it's May 11th. And if we put in the hedge here on May 11th, we're no longer at risk. And now we're going to reset from May 11th is now our new start of our holding period to be at risk. So if I missed this one, I don't know if you remember what your miss was. I don't think C is a bad miss.
Yeah, it was C.
Yeah, so that's not a bad miss, but the reason it's not a long-term is because we interrupted the holding period when we did this. By the way, if we would have done this like on maybe we do this in June 20th of 2020, then it's not a problem.
Mm-hmm. Okay, yeah, I get that.
All right, let's see what else is going on. Oh, we got a couple QIDs now. Dana, just remind me, you're taking 7. Are we all 7s here today? Dana, you 7 too?
I'm taking the 66.
Okay, so we got to change Q-Banks. No problem. That's why I asked.
I'm taking the SIE.
Q-Bank. Oh, let me clear up my slide here. Boom. Clear drawings. Yeah, sign in. Whoop. Let me see. I got to sign in on my Kaplan Q-Bank. Share. Okay, Kaplan, sign in. Come on. There. 66. Can you guys see my screen?
Yes.
Is it the Kaplan screen? I hope it's not anything untoward. All right. Study tools, QBank. And let's get the chat, see what the number, whoop, that's wrong, whoop. 157 2413. 3 years ago, your clients invested 100,000 in a newly formed GHI corporate bond UIT. So unit investment trust, very low probability on the test, but unit investment trust can be testable, by the way, on 7 as well, and 65.
It's
a
one, it's 413.
Oh, okay, my bad.
Oh, I think it's my bad. I think I mistyped it.
413, boom, okay.
Sorry.
Before we leave, just make sure you know what the
Okay.
questions on
Yeah.
UIT. UITs have a fixed portfolio of professionally selected assets, and they're passively managed. That is testable. I don't know if that's
Okay.
what the question was. Okay, here we go.
Okay, this is the
Client
one.
is long. Is this the right one?
That's correct.
Client is long, 400 shares of common stock. The current market price of 150. Wow, Charlotte, here's a hedge. Man, if I were your broker, Dane, I'd say, man, there's no sense going backwards. Let's put in a sell stop at 147, or let's buy a 145 put. The client is the opinion the market is going to be moving sideways. Okay, well, sideways means neutral. Kind of boring. What I mean by that is the client is, what I'm taking away here, Dana, is since we're going sideways, we might want to generate some additional income. Right? And covered call writing, when you write at the money, is called neutral because you make money if the stock doesn't go anywhere, right? Because the calls will expire. But the key phraseology for, man, all test takers is this phraseology. When you hear this phraseology, you know the answer is a covered call. That is very much a suitability question. Now, I've had people tell me, Dana, that they struggle on question where it's not numbers, but rather just asking strategy. And so I'm going to say, let's do this to generate some additional income. Write an ABC 150 call. I don't know why we would write one, right? We got 400. Write 4 puts. No, that would obligate you to buy more stock.
No more.
You don't want to do that. Buy 2 puts and write 2 calls. That's a partial caller, but it's actually A. It will never not be A when you hear this phraseology. When you hear this generate additional income phraseology, you can just go to the answer set, covered call, buy right. That's what you want to do, right?
Yep.
You agree to sell the stock. By the way, neutral, if I were bullish, by the way, remember this says moving sideways, just as an aside, that means we're neutral on the stock. And if you're neutral on the stock, you write the calls at the money. If we're bullish on the stock, we would write higher strikes. I'd say, why don't we agree to sell it at 155 or 160? That would be a bullish covered call because we're agreeing to sell it at a higher price. If we agree to sell it at a lower price, that would be a bearish covered call. So we have actually 3 types of covered calls. Bearish covered calls, where we agree to sell the stock at less than the current market price. We have neutral covered calls. This is this one, where we agree to sell the stock at the current market price. And then we have bullish covered calls. The more bullish you are, the higher the strike we would write. Now, one more aside, the lower the strike you write, the more premium you're going to get, but you're going to have to sell it at a lower price, right? So we'll get more money for the 150s than we'll get for the 155s. Remember this mantra? Lower strike call contracts always have greater premiums. Lower, higher, longer. Lower, higher, longer. All right. Now, I said 1 question per participant.
Yep.
But since I've already got the Q bank, I'm going to let Dana get another one in here just because it's easier to do it while I got the Q bank up than it is to close it down. Someday I'll learn how to use tabs. 1518132. Oh, I like this one. It's the Mahdi's. There are no futures on FINRA exams, but there are futures on 65 and 66. I think it's actually easier than options in this regard. All we have to decide is, what do we think soybeans are going to do? Do I think they're going up because I go long the futures? Do I think they're going down? I go short the futures. So it's just simply buy or sell based on the price. Okay, so our farmer produces soybeans. All right, so if you produce soybeans, if you're a soybean farmer, you'd be afraid that the soybeans are going up or down in price. What are you afraid of? You're at soybeans out. I got 500 acres of soybeans I'm looking out my window at. What am I afraid of? The price going up or the price going down?
Oh, I'd be afraid the price would go down.
That's right. In the cash market or spot market, I'm going to be selling my soybeans. And what I'm afraid of is the price might go down. So I call my broker. I've always thought it would be fun to be a broker in the Midwest. All the lives you didn't live, right? Ever I'm in Iowa or something, I go, man, that'd be cool to be a little broker here in Lafayette, Iowa, and help soybean farmers hedge their crops. I used to teach a lot of classes in the Midwest for people who were hedging, right? So here, what I'm going to do, I'm going to go short the soybean futures, and I'm hoping, Dana, that I'll make up in the futures contract by soybeans going down when I'm losing the cash market. So I'm talking to my significant other. We've sold the soybeans, and she goes, "Oh man, we got killed." I said, "Well, no, not really, honey. We didn't get too killed. I mean, I had a hedge in place, and so the money we lost on the soybeans in the field that we just made delivery of, that has been offset by the gain I have in the short futures position." Another way, I don't think it's worth going overkill on data, but when I teach Series 3, I always say to people, we're going to do in the futures market today what we're going to do in the cash market later on. Right? So in the cash market, I'm going to be selling soybeans. So in the futures market as a hedge, I'm going to sell soybean futures. So Dana, what if I'm a Kiko Man? Kiko Man makes soy sauce. So what would Kiko Man be afraid of? Soybeans going up or going down?
Up.
Yeah. So again, they're going to be buying soybeans. So they do in the futures market today, what they're going to be doing in the cash market later on. I'm the CFO of Kiko Man.
So I go long.
Yeah, I go long soybean futures, right? I'm talking to the CEO. He goes, "Man, we got killed in the spot cash market on those soybeans." I go, "Well, I did have a hedge in place. I have a long futures position that has gone up in value as a result of the soybeans going up. So that'll offset some of our loss there." So the answer is A. You'll get a futures question, maybe one or two on 65, 66. All right. Charlotte's got Series 7. For the third option video in the series playlist, which do you recommend? There's a different one on the 7 crash court and another one called cover calls. I think either one works, Charlotte.
Okay.
They're basically the same. I think one is a lecture with me just doing the lecture, and I think the other one's a class replay.
The class replay is like more like equations, I felt like going through it versus like the covered calls ones is like
I
step
don't,
by step.
I don't rate them. I don't know. I just, I don't let the perfect be the enemy of the good, Jarlin. So that's I guess a disadvantage on my channel. I just hit the play and record button, and some days they're better than other days. I actually think that if you go into the tutoring class replay, there's another one. I'd say
Okay.
probably more than 2. I tried to, in the cram course, I'm trying to help people if they, there's 1,600 plus videos. You can't, obviously nobody's going to watch them all. But I, in that cram course, have tried to, kind of curate a little bit of a playlist where I say, okay, if you're just going to watch, this is what you would get if you joined me for a 4-day Series 7 class.
Got it.
All right. So that's what I would recommend. Let's see. You got another Series 7 one. Okay. Let's see if I think I was able to keep the 7 QBank up. Let's see if I was able to do that. Yay. I think I got the QBank here. 1558. 158848. A customer buys one FLB October 50 call at 3. And she exercises the option to buy 100 shares when the market's at 60. So already a trick here. It doesn't matter the market at 60. I mean, I'm a happy camper because I have a choice to buy at 50, stock now trading at 60. Pretty cool. What is my cost basis of the stock? Well, I'm out 3 points for the option. I'm out 50 for the stock. So my cost basis, for the most part, follows break even. So it's whenever you see cost basis, you do break even. Almost always you'd be correct. So it's $53 a share or 5,300.
Okay.
Right. So that's what happens there. We follows. I think if I were a test taker, every time I heard cost basis, I would do break even. 99 out of 100 times I'd be right. All right, let's see what our next one is. 154940. Closed-end investment companies, maybe. Now, boy, if you miss Roman numeral one, bad. I mean, you should definitely know that ETFs and closed-end funds trade in the secondary markets. So as your tutor, I wouldn't be worried. I'd be worried if you missed one. All right, they're sold in the primary market only. They're redeemed traded by institutional customers. Well, sure, why not? I mean, retail, institutional, who knows who's trading them. So 1 and 4. Now, I don't really care for this particular question, but boy, ladies and gentlemen, there is no FINRA or NASA exam in which you're not going to get tormented on the distinctions between open-end and closed-end funds. Can you compare and contrast an open-end fund? The biggest test point is closed-end funds after the IPO trade in the secondary market, supply and demand, not based on the NAV. And open-end funds trade in the primary market based on NAV plus sales charge. I had somebody I was helping in a session earlier today. I thought this was pretty bad form. Good news, miss it now. Don't miss it on the test. But she says, how do I know it's a closed-end fund? I said, because there's no open-end fund that could ever be offered at less than its NAV. They're telling you you can get this fund for less than its net asset value per share. That has got to be a closed-end fund, right? So I wouldn't worry about this particular question. Was there something, Charlotte, in particular that bothered you about this question?
I just wasn't for like the option for 3, like the wording of closed end investment company. I was like, oh, like would that kind of filter
Oh,
into?
yeah. Charlotte, investment company is just a fancy word for mutual fund. So if you just change investment company to mutual fund, you'd be fine, right? Closed-end mutual funds, open-end mutual funds. And, I like doing sessions like this, Charlotte, because it just reminds me of my students who are English as a second language, because
Mhm.
I don't think this is an English to begin with, right? So, it doesn't, once you've learned the foreign language, they say you dream it, you know it. And so sometimes, guys like me, that language isn't foreign, but I've been a broker for 30 years, so
Mhm.
so it's hard when you're starting out. I joke, right? Because you got to learn all this new vocabulary, and and every industry has its own vocabulary, right? I got my contractors out here doing concrete, and the guy keeps telling me about the grade. I kind of get the grade. I mean, I said, listen, okay, listen, let me try and explain the grade to you because you keep having this conversation with me, and I just want to make sure I understand this, right? What we're talking about is this concrete going to drain properly? Is that what we're talking about? Just want to make sure because I don't want him to leave and I got a puddle in the middle of my concrete, right? But I think the contractors, I feel like they're kind of like like students. I'm a student. Like, okay, listen, you got to explain this to me like I'm a 5-year-old because I don't know anything about construction or grades or concrete or any of that stuff. That's why I feel sometimes I feel like that's why I'm paying you. I don't want to deal with it, right? So, all right, what's our next one? Vince, do you think suitability is more like Teskey? For sure, more like Teskey. Teskey, I think, has the best correlation. Brian is very, very good at distillation. I mean, we work very hard. Brian isn't allowed, and I'm not allowed to ask you, like, what was question 35? But we are allowed to say, hey, what could we have done a better job preparing you for? And somebody says, oh, man, I saw a quadro or whatever. And we say, ooh, let's make sure we have a question on that. So um, don't now, Vince, I feel like I might get caught in a triangle with Kaplan. Chuck Lowenstein is the guy Kaplan who is the subject matter expert. And Chuck, if you're watching this, I love you too. I just think Brian does a little better job. Chuck, every once in a while, Vince gets in the weeds and he'll tell you what's not on the test. Now you're doing 7, Vince. I forgot you're in 7. This guy is now Bill James. In both cases, the subject matter expert for NASA at Kaplan is Chuck Lowenstein, and they work very hard. And I work with him on debrief. And the guy on 7 is Bill James. Here, Vince, is one of my favorite things. Bill has asked me to review the latest edition of the Kaplan Series 7 book. And he says, Kaplan pays me as a consultant. He goes, I'll pay you. I go, of course you're going to pay me, Bill. But, part of me wants to say, Vince, why do you need a new edition? Has something changed that I'm unaware of? I mean, why do we need a 13th edition, right? Oh, well, if we didn't have a 13th edition, then, that Bill wouldn't have a job, right? Chuck and Bill. And so now Brian gets accused of the opposite, I would say. I had somebody in social media events who says Brian hasn't updated his content. in a long time as compared to others. And I go, okay, well, there's a happy medium, right? Do I think Brian probably should refresh his content? The answer is yes, and I discussed that with him, but it's still spot on. And then I think the opposite is test prep vendors who are constantly revising their content, even though the test has not actually changed. All right, looks like we got another one here for Series 7. 157. 1557. Now, I felt by that guy with events who had that comment. I thought, well, Brian really made an impact on him because he was calling him the think geek, not the test geek. I go, well, gee, you don't even got the guy's name right. So I feel bad if you guys said, oh, I think his name was Dean or Series 7 Guru something. Gargantuan Computer conducts a rights offering. So the rights offering is the mechanism for you as an existing shareholder to maintain proportional ownership. Because as an existing owner of the company, you have the first right of refusal on the issuance of new stock. And it makes sense that rights are short-term because the issuer, Gargantuan Computers here, needs the money and they need it now. And it makes sense that they're exercisable at issuance below the current market price. That is to give our existing owners an incentive to come up with the money. Because if we as a corporation can raise this equity financing from our existing owners, we don't have to hire an investment bank. And investment banks typically charge 7 to 10% to raise the money. So why not pass that savings on to you? All right. So it says current shareholders can buy the stock at 50. So we know that's less than the current market price. We should know that. We should know that rights are exercisable at issuance below the current market price. Current market price is 70. Wow. That almost makes me think they must be desperate for the money. I would take a strategic pause here and say, "Woo, man." So being able to buy the stock at 70 when the stock's at 50 is worth 20 points. In theory, Vince, because in reality, something is only worth what someone else is willing to pay, right? But in theory, that's worth 20 points. Now it tells me that it takes one right, says one right to buy the current stock. Okay, so what is the value of one right before the stock? Don't you love Kaplan? Before the stock trades X, and that means cum rights. That's Latin for with. So Vince, what that's saying in plain English is you cannot participate in this rights offering unless you're an existing owner. That's what that means in plain English. Now, I don't think you're going to have to do any of this on the test. I just think you need to know that rights are short-term, exercisable below. I call this, Vince, a legacy question. This is Vince's question or Charlotte? It's a legacy question. I mean, it used to be on the old Series 7, but I haven't had anybody tell me they've seen it in a long time. All right, so the theoretical value of the right is market price 70 minus 50, 20, divide by the number of rights needed plus 1. Now, it wouldn't be plus 1 if it was trading X, because then you could buy it without buying the stock. They're worth less if you have to buy the stock to participate, because you have to come up with more money. So to buy the stock plus 1 is 20 divided by 2, and that's 10. Right. So I think miss would have been here 20 divided by 1. I'd be happy with. I don't think you're going to have to calculate this on the test. Vince, if you want to participate, we'll send your rights and a check into the rights transfer agent, and you will have maintained your proportion ownership. The biggest test issue on your 7 is to be able to contrast rights with warrants. Yeah, that's definitely testable. Warrants are long-term and issue exercisable above. So do I think you're going to have to calculate the value of a right, cum or X? I do not. I do not. All right, let's see what our next one is. Boom, boom, boom. Yeah, you need right on events, you have to add the 1. And the only reason you add, and this, it drives me nuts because this is kind of a gotcha question. What I mean by a gotcha question is where I consider this a gotcha question is because they don't tell you cum. They say right before the X, right? So they're asking about the day before the X. Remember, X means without. And so that means at some point you could buy the rights without buying the stock. So right now, as your broker, I'd say events to participate, you have to buy the stock. So that means you're going to have to come up with $70 to initially just to get into the game, so to speak. If I were your broker, I'd say, Vince, why don't we wait till it's trading X? Then we can get it for a lot cheaper, right? Because we won't have to buy the stock. All right, let's see what our next one is. 1454. 154, series 7. 154 8904. By the way, if you're watching the replay, you don't have to have Kaplan questions. We're agnostic about helping people in terms of who their study vendor is. About 3 sessions ago, we had somebody with a brought STC question. Somebody had past perfect questions. So we can do any questions you got. But Kaplan is easier because I can bring it up backstage. Let's see. If a fund has a fixed portfolio, ooh, sounds like a UIT to me. I don't know yet. Fixed portfolio, long maturities. Ooh, interest rate risk. How substantial? Ooh, there we go. I joke, if anybody asks you about economics, finance, or investments, and you want to sound smart, you should say it has a lot to do with interest rates. If they say, what about them? You say they fluctuate. They say, is that good news or bad news? You say it depends. Can you tell me more? The longer you can go without answering somebody's question, the more smart you'll sound. Okay, let's see what they want to know. How will the rates affect substantial changes? Now, I don't like here they didn't tell me up or down, right? Because they just tell me it's volatile. So if interest rates are going up, then the bonds are going down. But if interest rates are going down, the bonds are going to go up. The current value will fluctuate significantly. What this is getting at is, do you understand that longer term bonds have greater volatility? Right? The way to get these rights is long and low. Longer term bonds are more volatile in price than shorter term bonds. So the answer is A. Let's see what B says. Don't ever take an answer that's like you can't determine it, or it's not, it doesn't fluctuate. No, don't take passive answers. Like I'm telling you right now, the answer is never cannot be determined. Don't ever take that as a choice. Oh, maybe I can't figure it out. No, you can. So, both the same income and current value will be fluctuating significantly. Well, that would be a really bad miss because you should know the income doesn't fluctuate. You should know that the interest rate, the coupon, the nominal yield, the fixed or stated rate of return doesn't change. What changes is the price and the yields that are reflected in that current yield, yield to maturity, yield to goal. So I think C is a really bad miss. Both the income and the current value will remain unchanged. Don't ever take that, that something is going to happen. Do you remember what you were struggling with on this one?
I think I just didn't maybe I think I chose B. I just think that I didn't realize that it was maybe talking about the coupon part or something.
Yeah. Remember, this is very testable. I don't like the phraseology of this question, but this idea of volatility with interest rates on fixed income investment vehicles is a testable concept. Charlotte, I think the way they asked it here is a judgment question, and those are really the tough ones, right?
Yeah, I understand the fluctuation of bonds and stuff. Well, just I think the wording was challenging.
There you go. That's why we practice, right? We practice, we drill and rehearse. I was just talking to Vince about this, right? Good news. Kaplan jerks are bigger jerks than the real jerks.
Yeah.
So they're hoping to stretch your mind and hope it doesn't go back to the same spot. Sometimes that doesn't happen. Sometimes, but hey, listen, you got to fight through that. And I had a person I was working with, and he was upset with Kaplan. He was working hard and he was getting a lot of negative feedback. And I said, I know this doesn't feel like it, but the negative feedback is constructive. It's what we need to, know what we need to kind of remediate. And so stick in there. And, it's not going to be overnight, and it's going to be work. And so he got so frustrated, he bought a different vendor, and his scores were 10, 15 points better immediately out of the gate. Yeah. And I said, I don't want to rain on your parade, but this may not be a good thing. I mean, I'd be great if you're getting 10, 15 points better because you've learned that much in 20 minutes, that's wonderful.
Right.
But if that's just a reflection of that test prep vendor, I said, do me a favor. Here we go, Vince. I said, Brian has pretty strong correlation. Kaplan has pretty strong correlation. And for 66s, this is called standard deviation. And there's a smaller standard deviation variance in Kaplan and the actual exam and Brian. Brian has less variance. Usually, not always, there's statistical anomalies. Fat tails, we call them, it's statistics. But you know, usually people will improve 5 to 12 points on a Kaplan. I had a lady, very high-end lady, she's taking her 24. She's not in the mid-70s. Her last practice score is a 66. And she goes, what do you think? I said, man, I would rather you're in the mid-70s, but it can be done. Depends
Yeah.
on your draw. Kaplan's 5 to 12 points. So, and she passed her 24. I said, now listen, you better never tell your baby brokers that's the way to do it. Right? You know, you need to, you know, because she was just, you know, I love her aggression. On Friday, she had like a 62. And I said, listen, there's no way you're passing. She said, well, I'm going to work this weekend and I'm going to, okay. That's okay. And so I've been pleasantly surprised. But that is kind of what we would expect, that score goes up. Anyways, she took the Bryan test bench. She got a 67. Guess what she got on the exam? 67. Right. So that's the downside. That's why I feel good when you tell me what you get on the test geek score, because I know that score reflects a real score on an actual exam. So that's that. By the way, if you're joining us, Dana, do you have Brian's test geek practice test? Do you have
I
it?
do, I do, and he's tutoring me as well.
Oh, perfect. And then Charlotte, do you have that as well?
No, I don't. I'm just
Okay, I'll
using
send it to you.
Kaplan.
I'll comp it to you. I'll send it to you as a PDF. So
Okay.
put it away because we want to do it 2-3 days out, right?
Oh, okay.
I'm sorry, who's the fellow joining us on there? Merkelich? I like that. What is that? That's kind of I hope I'm not messing that up.
Yeah, my first name's Honest, but that's my last.
Honest, I'll make that offer to you too. So if you send me an email, I'll make sure you get a copy of Ryan's test geek practice test.
Oh, thank you.
By the way,
I'm taking
this
the
offer, if you're
SI.
watching the replay, this offer is not open to anybody than the 4 people that are in this session. So if you join us for a session, every once in a while, maybe get a freebie. All right, let's see what our next one is. Ginny Mae. I know Ginny Mae will be tested. Absolutely. Absolutely. Sally Mae, Freddie Mae, and Fannie Mae. No, they will be used, though, Charlotte, as distractors. Distractors are the technical name for wrong answers. Let me give you an example. Which of the following has the full faith and credit of the United States government? A, Ginny Mae. B, Sally Mae. C, Freddie Mac. D, Fannie Mae. You would say Ginny Mae, right? They're using them as distractors. Let's try it again. Which of the following pays interest and principal monthly? A, Ginny Mae. B, Freddie Mac. B, Fannie Mae. C, Sally Mae. Ginny Mae. So they will be in there as distractors. By Fannie Mae and Freddie Mac have an implied backing of the United States government, not the full faith and credit of the United States Treasury. It's attestable distinctions. Now, by the way, the implication is almost as good as the direct guarantee, but you know, direct means there's no, nobody has to tell you whether or not it's going to happen. All right, let's see. We got a couple 66s here. So let's see if I got my 66 Q back. I think I do. All right, our first one is 152 1361. An investor purchases 100 shares of RIF common stock. Okay. But, by the way, I've lost this argument. Chuck and I get into it every once in a while. I told you, and I get it onto him about the poor grammar in his practice questions, where we have to actually get through the grammar and phraseology to even figure out what the heck the question's about. Now, when I get into it with him, he says, Dean, would you agree that NASAA exams themselves have poor phraseology and grammar? Do you think, Dean, I don't know that do you think it's intentionally that I'm doing this, or do you think it's just I don't know how to use proper English? I go, okay, you got me. Right. So he's trying to master the bad phraseology and grammar. So here I got to kind of go, okay, what in the heck is this saying? In the year following the purchase. Now, the only reason I want to be real clear about that is because so far there's no long-term capital gain. I don't know if that's what it's about, but I like to sometimes I get confused to put a year to it. So 2025 and now it's 2026. The RIF shares have appreciated by 12%. So the only way you're going to make money in any investment is income stream and or price appreciation. Those two things together are called total return. Total return. I got a person here trying to sell me 80 acres. And, 80 acres, the only way I'm going to make money is to sell that to someone else for more than I originally paid. There's no income stream on this property. Right? If it had a house, maybe I could rent it out and get some income or something from it. So I made 12 and I made 2. So that's 14%. If inflation, well, now this is the Jedi mind trick. That 4% had nothing to do with answering this question. The answer is 14. Now, a different question. If they would have said, what is your effective return or what's your return in constant dollars, then we would have taken the 14 minus the 4 and said 10. But here it's just serving as something to cloud your mind. Right? Let's see our next one. 152. 0865. Which of the following incorrectly states the relationship between net present value, internal rate of return, and required return? Okay, before I jump into this question, I would try and get comfortable with the terminology. Net present value would be the difference between present value, right? Net present value, and whatever the current market price is. And what I'm looking for is value as a valuation technique to be able to buy something that has a positive net present value. In other words, if the present value is 950 on the bond, and I can buy it for 920, present value is 950, I can get it for 920. That's a good deal because it has $30 of net present value. If the bond's priced at 950 and the bond's 980, I go overvalue. As negative net present value. Sometimes I like to watch Deal or No Deal with Mom. It's one of her favorite shows. And so I kind of think of it as like deal or no deal. Positive net present value, deal. Negative net present value, no deal, right? Now, if it's 950 and then the present value is net present value, 950 is current market price, present value is 950, then it's got 0 net present value, right? It'd be efficiently priced. All right, let's see. So let's see what our choices say. If the net present value is greater than 0, then internal rate of return is less than the required return. I think of the internal rate of return that actually is the bridge from present value to future value. It's that bridge, like yield to maturity in a bond. And that is incorrect. It is incorrect. A is incorrect. It would be if net present value is greater than 0, then the internal rate of return is greater than the required return. I think this is a pretty weird phrased question, but at the end of the day, on the actual test, it'll be a little clearer. Did you get any of these events? Do you recall on your 65 and 66?
I think I did have something similar to this, but I agree. I think it was clearer than what it's asking.
Yeah, evaluation. This is an evaluation technique. So let's see what Chuck says. If net present value is positive, that is important, right? Because that's a good deal. That's the main point. That's a good deal. The investor's internal rate of return is greater than the required rate of return. What Chuck is saying in plain English is that we're going to have an internal rate of return that's like 9 or 10 and the required is only 7. Because remember, internal rate of return means 0 net present value. I almost spent my whole career data and never got in trouble with FINRA about anything. And Lenny, my District 1 FINRA examiner, took exception to an email I had sent to an institutional investor. This is what frost me, Dana. Somebody who knows how to do math and is capable of protecting their interests. And I said, Dana, if you make an asset allocation, your pension to this private equity fund, and you make an asset allocation of 20 million, our internal rate of return we're targeting is 20%. And that will turn this $20 million into $80 million, the present value into the future value, over the life of the fund, 5 to 7 years. And, and I told you, there's, no guarantee, Dana, we're going to get an internal rate of return. If we got more than that, that'd be fantastic. But Lenny took exception that I was showing somebody, you know, in his words, he thought I was kind of guaranteeing Dana that you're going to have $80 million 5 to 7 years from today. No, whatever. You know, somebody's going to go let these guys go. I'm taking the SIE. All right. I have a Kaplan. I use Lernick. I never heard of Lernick. I'm having trouble with taxation on qualified, non-qualified. The biggest point there, use the channel search bar. I got a lot of the content on this. The biggest thing is qualified means it's coming through your employer. And that means you have a zero cost basis. You know, think here of your 401k. Think here of you're a teacher and you have a TSA, tax sheltered annuity, or you're an employee of a nonprofit hospital. Those are all qualified plans coming through your employer. Now, the key point of that is that means when you get distributions, it's completely taxed at ordinary income, everything, because you have no cost basis. Non-qualified retirement plan means a retirement plan you're not getting through your employer. It's something you're doing on your own. Think here, a variable annuity. You know, Coco Gauff, what is she, 22 years old? I say, Coco, you can't possibly spend this $10 million you just won in the French Open. Why don't give me $1 million after tax, $1 million you already paid taxes on. I'll put it in a variable annuity. That $1 million, Coco, is your cost basis. You're never going to have to pay taxes on it again because you're paying taxes on it today. We're going to put it into a mutual fund, a sub account, a separate account with an insurance wrapper. And 37 and a half years from today, when you're 59 and a half, you could access this money. And so she calls me when she's 59 and a half. She said, hey, Dean, what do I got in that variable annuity? I said, you got $10 million. I said, now remember, you have paid tax on $1 million, so the $9 million has never, ever had taxes paid on it. So I said, Coco, what do you want to do? You want to get a random distribution? Want to turn it into an income stream? She has lots of choices, but all the distributions, remember, of the 9 is going to be taxable to her at ordinary income tax rates. If she says, send me the 10, she owes taxes on $9 million, right? Because that's money that's never had taxes paid on. So, I don't think the reason I'm shying away from any more depth in discussion, I think you're going to have to know that more depth, very light depth on SIE. 7, 65, 66, a little bit, you got to know it at a deeper level than what I just did. All right, anything else for today? Last call.
Should I take any? I'm testing Monday.
Ooh.
Should I take any?
For all intents and purposes, your study plan is over, right? You've executed it. Maybe keep your rhythm tomorrow morning. I think biggest thing is Sunday night, get some rest. You know, we want to be as bright-eyed and bushy-tailed on Monday as we can possibly be. Want the test to come to you. You want to be the test. Don't be too on top of it, right? What I have, so more about rhythm and you know, rest and all those other variables right now.
Okay.
So,
Do you think
look,
it's
I
worth
paid
it to try to take some other, just to get some other questions
well,
other
it's
than
up to you.
Kaplan?
Listen, with your score on Test Geek, I think you've earned the right to do whatever makes you comfortable. I think your comfort and confidence level are the most important thing between now and Monday.
Okay.
I don't think we have a knowledge deficit. So that means if you don't want to do that, or if you think you might go backwards because, you know, you might run into things you don't know and go backwards. If you're going to go wobbly, then I don't want you to do it. But if you feel doing one more, we'll give you one more data point and make you more comfortable and confident, do it. If you think there's a chance that you could do one and go, oh my God, you know, then don't do it. Right. So I guess what I'm saying is guarding your psyche is the most important thing.
Yeah.
You know, in the last day or two, I had a guy got really mad at me, and I said to him, I said, listen, you got to get rid of the distractions. He goes, Dean, my wife and kids aren't distractions. I said, let me rephrase. They are assets, certainly. I'm not insinuating that your wife and kids are anything other than assets. They're certainly not liabilities. Not my point. My point was, you know, we got to say, honey, kids, can you give me some space? You know, can I go into the study? So that's the kind of thing you should be working for. Same thing. I'm joking, but same thing with people. If it's somebody who you think is going to be good to go have dinner with or brunch tomorrow, and they're going to put you in a good place, then by all means, I say go for it. If it's one of those friends that maybe thinks they're helping, but they're not really helping. Like, oh my God, this stuff is tough. Then stay away from them, right? I do like that you're not going to work Monday. One of the reasons I like Monday test dates is because we don't have to worry about anything going down Monday at work, right? I mean, I joke, there could be a fire that gets put. I like Monday. Monday's a good test date, I think. I like Tuesday if you can get Monday off.
Yeah.
So otherwise, I'm not so sure I like Tuesday if you're gonna have to go into work and listen to people trying to be helpful. I had one guy, he told me he was so worried about his coworkers that he didn't tell anybody he was testing. So he just was doing it, which I think would be more stressful. Everybody's different. I would find it more stressful to be hiding my books and pretending I'm not studying than be out in the open. But whatever. Everybody's unique. I do like that he's paying attention. I always joke, Vince, it's too late for you, but when people are starting their study plan, I would be very not afraid to tell somebody, hey, listen, I'm emotionally fragile right now. I'm studying for my exam. So, if you could just give me some space, that would be great. The exams do this to people. This guy I knew his name was Garrett. He's a smart guy. No doubt he's going to pass. And in the financial district in San Francisco, the testing center, you bump into people. And I saw him walking down the street and he looked like he'd been in a train wreck. I said, Garrett, are you okay? I just tested. He continued to walk like a zombie. I said, did you pass? He goes, yeah. He kept walking. I mean, only the test does that to people. I had a young lady, and in those days, you got to print out whether you passed or did not pass. You still got to print out. And she had failed twice, and she had the printout. She heard the printout. I think it's like Pavlov's dog. The third time she passed, but she started crying because she heard the printout, and she thought it was a fail. And they said, "No, you passed." So only the test does that to people. I told you in the financial district in San Francisco, Vince, I was an investor and owner of a pub called the Beer House, and it was close to the testing site. And I had these three guys I knew they were going to pass and they were going to be good debrief. So I said, listen, when you guys are done, just go over to the beer house and I'll stand you some pints until I can get there because I'd like to debrief you, but I'm teaching. Anyways, I come in and Tim says, did you say those guys can drink on your tab? I said, yeah. He goes, you know what your tab is? Only Series 7 does this to people. If I would have stacked that much cash on the bar and said, drink it up, you would never be able to do that unless you just took your 7. Needless to say, I got no debrief.
Definitely
I said,
not.
what are you guys doing now? Oh, I'm going to drive home. I go, oh, no, you're not. You're going to stay right here and sober up, But so 7, all these exams are like that. So, you're really going to feel good. YouTube events always on me to try and sell stuff like channel memberships and coffee cups. And it doesn't speak to me at any level, except this. I've been thinking about doing this, Vince. I might have a tombstone available because you don't get anything. I think FINRA could make a fortune in NASAA if at the end they said, would you like for $40 a little commemoration of your test date and your testing victory? And it would give you like your date and your exam. I'm sure they probably think somebody would frame it and try and say it's a diploma or something. But I was thinking maybe on the channel events, I'll put like a tombstone you could buy, like if you do the hat trick or whatever, and you could get it laser printed as a tombstone to put, because you don't get anything, right? Except that you passed. Maybe that's good enough, right? You just know in your own.
I have mine, magnet on the fridge.
There you
All the passes.
There you go. There you go. So, anyways, yeah, testing is just one of those things. I joke it's a barrier to entry into the securities industry. I had one of my clients, he knew what my commission was. My commission was $30,000. And he said, Dean, I could refer other people to you and you could make 30,000 and give me some of that. I said, his name's Russell. I said, Russell, that's a great idea. And then I handed him a stack of books. He goes, what's that? And I go, those are the materials you need to pass your SIE, your 7, and your 66. And once you get that all done, I'll register you. And the 30 grand, you can have 10. He goes, well, Dean, I don't want to do that. I said, I didn't think you did. So I guess all I can say is thank you very much. We can't give concessions, discounts, and allowances to people that aren't what.
When I don't feel like studying, your voice comes into my head. If you're poor and you deserve to be rich.
Oh,
Were you on was any of you guys on the live stream Tuesday?
Oh yeah.
That was.
What did you think of that guy? Was I out of, I hope I wasn't too rude. We had
Oh
a guy.
no, that was so the way you handled that was fine.
I was like the guy. So Vince, were you on the Tuesday
Yeah,
thing?
I think you were overly nice to him. He
Well,
was
well,
definitely
I'm not
trying
known
to.
for being a nice guy. So I joke, if you hit my stockbroker marine button, I can turn into a major asshole pretty quickly. And he was getting close. He was getting close. What was it? Was millionaires in training or something? And I thought, well, that's
Something like
kind
that.
of so. But I was thinking, Vince, that's kind of cheesy, anyways. I mean, if I were trying to recruit people, I'm not. Yeah, but hey, I'm an OG. I mean, so I think saying you're poor and deserve to be rich is a little different than we're millionaires in training. Let's hope. Right.
Definitely.
But this is the sweat equity investment, right? So you got to get past the exam part of it. It's a rite of passage. Everybody has to do it. And then I told you I was funny with that lady. I told you who passed. I was surprised. But the other thing I always think is funny on the 24s, they're the biggest whiners of them all. You would think it would be other people than the 24s. They're always whining about their books or they have to take another test. And I get it because it's been for some of them 10, 15 years since they took a 7 and they think they're done and then they get a major promotion or they're going to get overrides and they got to go take another exam and it's like PTSD to them. Oh, I thought I was done. I'm not going to take another step. I always feel better, Vince, for the people who from day one are hired to get that whole sequence done. Good news, we don't have anybody who I don't think is taking a 6. Hey, to get in the business, you do what you got to do. If it's a 6, it's a 6. But I really feel like starting every 6 class by saying, why don't you just get a 7? You're going to need it eventually. Yeah, I can't tell people get a 6 and then they have to circle back and get a 7 and they got to get a 65. So over. As for the night before the exam, yeah. Charlotte, I have 2 now. I have 2.
Oh.
People were asking me to redo the series 7s in 60 minutes. And I didn't think it spoke to me to do that again and call it, series 7 and 60 minutes part 2 or part 2. So what I did in terms of revising those now is I have what's called the Mighty 90. So instead of 60 minutes, it's now 90 minutes. And I have it same deal basically. It doesn't outdate the other ones, but I have the SIE in 60 minutes. I have the SIE Mighty 90. I have the 7 and I have the 66 and the 65. Now, again, you're not going to learn by watching the video the night before. The days of cramming events are over. So there's no productive good that can come from staying up Sunday 2 a.m. cramming before you're going to test Monday morning. Not bueno, right? Those days are over. Now, as I said, I have people I work with. I tell them, hey, a tiger can't change their stripes. If that's who you are, and again, Vince, that makes you more comfortable and confident to cram. Well, then, hey, I'm not a fan of that, but it is what it is, right? So you're not going to learn that, but I hope it helps people get into a better flow because it's not a natural circadian rhythm to wake up on Monday morning and your brain isn't at a series 7 kind of space. So I like those videos because the intent is that maybe listen to those, confirm some issues, and then you can go down there and you're not warming up on the actual questions. Sometimes people miss questions not because of knowledge deficit, unfortunately. And I'm not a new age person. I'd be the first to say I'm not. So I'm not saying, Vince, you should take a crystal down to the test site with you. But this person at STC, they put the wrong answers horizontal. Kaplan does it vertically. But anyways, this person, every time he would be able to climb back up and he was getting mid-70s. But boy, he was digging such a hole. I mean, the first row was like solid red and then he'd be climbing back. And I said, could you do me a favor? Can we just set the intention? We're not going to go off the rails in the first 20 questions because your life would be so much easier if we didn't start on a hole. I mean, usually it's people who get tired, Vince, towards the end that start falling off the rails. So make sure on Monday you give yourself permission every 30, 40 questions just to take a mental trip to Tahiti, just to come back to it, particularly that last 20 or 30, because that's when I find people get tired. When you get tired, your point about qualified, non-qualified, I had somebody swear to me that they had the exact same question with different answers. And I said, what's the QID? I said, okay, let's read it again. And what he was missing is NON. One of the questions said it was a qualified variable annuity, a tax sheltered annuity. The other question was exactly alike, but didn't say NON. Right? So those were different questions. So be careful. That's just make sure you try and keep your reading skills. If you need to step away and go use the restroom, fun. Splash some water on your face. Now, Vince, people make fun of this, and you've been with me a long time, so you've probably heard this. I have a guy testing tomorrow. Or Monday, he swears he's going to do this. I think he might, because he's got that kind of personality. I was telling Vince that the thing that I think he should be doing is mirror, mirror on the wall. Who's the greatest? In his case, 24 test taker of them all. Vince, or, hoorah. And I usually tell people to do that in the morning and then do it in the evening before they go to bed. And he goes, Dean, I think I'm going to go in the bathroom and take a break and go in there and do it. I go, okay, well, and he said, I'll record it for you. I go, I would love to hear that. Wouldn't it be fun? You're taking your test, and all of a sudden you hear some guy in the bathroom. Who's the greatest series 7 days? That would be a pickup, right? So,
That's not a bad
I'll see
idea.
well, we'll see if he does it. I mean, I think he's, got
Maybe I should do that to take a step away, because this one I'm
well, be careful though.
got plenty of time.
The only thing I warn about, some of these people don't have a sense of humor. So, be careful. I mean, I joke these prometric sites, some of them are the nicest people you'd ever meet. And then some of them are Nazis. I mean, so you never know. Well, the prometric site to prometric site, what kind of people you're going to get. I still think that going to the site is better than doing it online. You can get exceptions to try and do your SIE at home. I don't believe in doing that because, it introduces too many variables. Like is your computer gonna power down, or they're gonna, ask you to turn your camera on and inadvertently you've left notes out or something. I just believe you should go to the site to do it. All right. Anything else for today? I will put up another one. We do have office hours for paid students. I think that's Monday. I think I moved it from Tuesday to Monday. I got to take mom to the doctor on Tuesday. Charlotte, I'm going to talk to you. If we can move that Monday, that'd be great. Or make it in the morning so I can. Right now, my brother says he's going to help me take care of mom, but I'll believe it when I see it. But you know what? I can't take that back. He did drive her to bingo this afternoon. So, okay. He is stepping up a little bit. So,
Yeah, Dean, just feel free to give me a call.
yeah. Anything else? Let's see. Overall video there. That's Charlotte. I think that's it. Okay. Remember, inch by inch, your exam's a cinch. And remember, mirror, mirror on the wall, who's the greatest test takers of them all? Guru Nation. Woo. I used to tell people if they miss it, and I had this very high end lady, and she just lost it. I told you people are fragile. You don't know how fragile they are. And I went, and she goes, that is the rudest thing I've ever heard. And if it was anything other than securities, Dean, I'd be in you all day long. And she's a technology person. And yeah, and I go, oh my God. She just went off the rails. But I always thought it was funny. I said, okay, well, I apologize. I didn't realize it was that rude and it was causing you to lose your chi. I didn't mean to steal your chi from you. Anyways, I said, okay, well, I'm sorry, try again. But I had some Vince everyone who's testing. It'd be fun if this guy does it. Maybe you guys you do it, Vince. But well, for a while, people were actually going down there. Yeah, they would, if they were all testing there, like those 3 guys, they would start the exam by going, that would be a sign that, they were one of come from Guru Nation. So maybe we could start a thing around the country when everybody hears somebody going mirror, mirror on the wall. Well, those are those guru people.
That'd be great.
We could become a cult. I have an ash ram out here in my acres. Good news, we're gonna have concrete soon, so we want to have someone to test all over this place. My brother's funny. He goes, you're putting concrete, you're going to lose your lawn. I said, Chris, we're off grid. This is not a lawn. This is, this is places cows come to poop. I want the cows off the property. All right, everybody. I will see you. Some of you I'll see Monday. And then we'll put another one of these up, another jam session. I'm trying to either do office hours or a jam session once a week is my rhythm I'm trying to keep. All right. Talk to you later. Bye.
Thank you.
Good luck, Vince.
Thank
Good
you.
luck,
I'll
Vince.
text you, Dean.
Oh, please do. Please do.